Faith-based organizations and churches across the United States are standing on the threshold of a historic $100 trillion generational wealth transfer. Yet behind the church walls, many local congregations face a quiet financial reality. National studies show that over 52% of nonprofit organizations operate with less than 3 months of operating cash on hand, leaving them vulnerable to building maintenance issues, rising operational costs, and economic fluctuations. As church leaders, pastors, and development officers, you are constantly searching for creative ways to fund your next capital campaign, preserve your historic properties, or expand your endowment fund. What if the solution is already sitting inside a dusty filing cabinet in your administrative office? For decades, generous members have donated life insurance policies to their congregations, but too often, these policies have turned from active blessings into silent, expensive liabilities. Many donated contracts are universal life insurance policies, which rely heavily on interest rate performance to remain active. When these policies were originally purchased in the 1980s and 90s, many illustrations assumed high interest rates that would keep the policies in force at the elected premium forever. However, as interest rates plummeted to historic lows over the last few decades, these policies severely underperformed, forcing churches to face a difficult choice: pay massive, unexpected premiums out of pocket or let the policy lapse. The cost of inaction is staggering, as approximately 90% of all permanent life insurance policies ultimately lapse before a claim is paid. When a universal policy lapses, the insurance carrier keeps all premiums paid over the years, and the church receives absolutely nothing because all the cash value has been depleted. Historically, the fallback was to surrender the underperforming policy directly to the carrier, but this typically returns only a nominal cash surrender value, which represents a tiny fraction of the policy's true market worth. The emergence of a regulated secondary market for life insurance offers a much higher form of stewardship through a process called a charitable life settlement. Instead of letting a policy lapse or surrendering it back to the carrier for cash value, the church can legally sell the contract to a licensed institutional investor. In this transaction, the institutional buyer pays the church an immediate lump sum cash payment, assumes 100% responsibility for all future premium payments, and ultimately collects the death benefit upon the insured's death. This option is highly preferable to simply cashing in a policy with the carrier because, on average, a secondary market life settlement returns 2 to 9 times as much cash. This competitive bidding process unlocks hidden value based on the insured's age, health status, and the policy's premium structure. It allows the church to receive substantial cash today while entirely eliminating the ongoing, long-term premium drain on its operating budget. This strategy has already rescued countless underfunded church policies. In one notable case, a local church held a donated permanent life insurance policy on a senior member, but the cash value was insufficient to maintain the policy, and the carrier demanded significant premiums to prevent a lapse. The option of surrendering the policy was equally as unappealing because the cash surrender value was next to nothing. Rather than walking away empty-handed, the church leadership worked with a life settlement broker, which put the policy out to competitive bidding among a wide number of institutional investors. This ultimately transformed an endangered policy into $180,000 in immediate cash for their current ministries. In another instance, a 75-year-old donor named Edna had previously gifted a $350,000 policy that was on the verge of lapsing due to low interest rates. Surrendering the policy to the carrier would have returned only $4,500, but the charity auctioned it on the secondary market instead. The transaction secured $140,000 in cash, over 31 times the carrier's surrender offer, allowing Edna the joy of witnessing her legacy actively at work during her lifetime. To implement this strategy within your own congregation, your first step is to conduct a thorough asset audit. Gather your vestry or finance committee and catalog every life insurance policy currently on your church's books, detailing the policy type, the current cash value, and the annual premium required to keep the contract active. The policies that yield the best life settlement offers are universal life, whole life, or survivorship life, which pays on the second death and have a death benefit of $100,000 or more. The insured should now be over age 70 and have experienced a moderate decline in health since they bought the policy. Next, update your church's gift acceptance policy to include explicit guidelines for life settlements. The updated policy should state that the church reserves the right to evaluate any donated life insurance policy for a potential life settlement rather than automatically keeping it or surrendering it. This establishes a transparent legal framework for your board to liquidate underperforming or high premium policies and manages donor expectations from the very beginning. Then select those policies from your research that meet these criteria. As a first step to determine if a policy may qualify for a life settlement, see the assessment in the description. Senior members of your membership may own life insurance that has outlived its original purpose and may be viable candidates for a life settlement. Share this option with your congregation's senior members through a targeted planned giving outreach. We can create a video customized for your church that explains, in simple terms, how a life settlement works and the benefits that the donor and your church could share. If you're interested, let us know. By challenging these members to endow their annual pledges through a life settlement, they can convert an obsolete asset into a major cash endowment that funds their annual tithe in perpetuity. Because a life insurance policy is a highly complex financial and legal contract, a life settlement is a major financial decision that must be handled with care. Before pursuing or implementing a life settlement, we strongly recommend that both the individual donor and the church leadership consult with a qualified financial advisor, a certified public accountant, or an estate planning attorney. Taking this step ensures that the transaction complies with state insurable interest laws, maximizes tax efficiency, and perfectly aligns with the long-term goals and circumstances of all parties involved. This video was created by the Hidden Asset Advisory Group, a partnership between Robert D. Kavanaugh, CLU, a 50-plus year life insurance professional, and a 23-year-old life settlement company that puts qualified policies up for bid and secures the best cash offer from its many institutional buyers. If you found value in this video, you may also be interested in our video, How to Turn Life Insurance into a Lasting Legacy and Retirement Income, which explains how combining a life settlement with a charitable gift annuity provides the donor with guaranteed lifetime income and a gift that supports the church.